In this video, we're going to cover market structure for beginners. So it's going to be very much an introduction to market structure. We're going to talk about some basic terms, talk about some basic time frames, and then go over an example as well. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time trader. I'm at the stage now where I've gained some experience by watching the market for quite a few months now, and I've understood how important market structure is. So if you're just starting out as a beginner, you probably want to learn about market structure in the beginning stages of your journey, but certainly I think you will appreciate market structure much more once you have some experience of looking at the charts for many months, and you can kind of see how this stuff sort of plays out. So certainly something you want to get into when you're just starting, but I think some experience is going to help you. So if you don't come away with too much from this video, look at some charts, study some charts, analyze certain charts for quite a few months, and you can start to see how market structure is very important and how it actually plays out on the charts. Now, if you're a beginner and you've looked at a price chart, you've probably thought, what is going on? Well, what if, with market structure, you can start to understand that there is a story that a particular stock or security is telling you. You can spot the trends, maybe predict some reversals, and start trading once you start trading with some confidence because you understand market structure. So market structure is king. So that's what we're going to cover in this guide, in this video. Just talk a little bit about higher highs and higher lows, some terminology, break of structure, change of character, and then we'll talk a little bit about different timescales and how that is important. Now, if you are a beginner, certainly you can consider downloading my 6-month blueprint below this video. That outlines all the steps that I took on the first 6 months of my journey. And it's a really good roadmap to help you get on the right path when you're just starting out if you don't know what to do. And then in this video, I am using TradingView. If you aren't using a trading charting software yet, certainly try TradingView. You can sign up for free with the link below this video. Okay, so market structure, what actually is it? Well, you can think of it as sort of like the shape that price carves out on a chart. So it's how traders are going to figure out if the market is trending up or trending down. So making higher highs or higher lows. And we're going to look at a diagram and understand exactly what that is. So some people have given this analogy. You can sort of think of it like a river. Up close, you see all the little waves, so the short-term moves. But if you step back, you can see sort of the whole big picture. So it's going to matter what time frame you are looking at and how much market structure is going to potentially affect your trades based on your strategy as well. So again, the catch is the time scale that you're looking at, like an hourly, a daily, or maybe a weekly chart, changes the story. So on a low time frame, so when every candlestick just represents maybe an hour, you might see a stock climbing fast, and you might be in an uptrend. But when you zoom out to a weekly chart where every candlestick represents a week or a month, those little wiggles, they might flatten out into nothing, and you might reveal the bigger trend, which could be a downtrend, for example. So the time scales matter, and we're going to talk a little bit more about that. But the building blocks of market structure are basically higher highs and higher low. So these patterns, they're the heartbeat of market structure. They tell you who's winning, the buyers or the sellers. So higher highs and higher lows. And then the other aspect of it, and we're going to jump over to a diagram right away, is called a break of structure. So the break of structure is the trend's green light. So a break of structure is when the price smashes past a key level, proving that the trend is still alive and still kicking. And that's a break of structure. And then the other term that we have here is called a change of character. And that's a warning sign saying that the trend might be changing. So a change of character is when price breaks a key level against the trend, hinting that it could be a flip. It's the market maybe whispering, hey, things might be changing. So let's jump over to a diagram. And we're going to go over these in detail so we can understand them fully. Okay, so here what we have is basically a stock movement. Now, it's very broad. Obviously, there are way more ups and downs and zigzags when a price moves. But if you kind of zoomed out, this is what pattern a stock might be taking. So let's go and first label the higher highs and higher lows. So if we start down here, we can see the stock rises up to a peak and then it retraces a bit. So this would be your first higher high. Then it retraces a little bit down to this area and then it rises back up. And in this area, you would have a higher low. So HL, that stands for a higher low. And if you come back up here, the stock rises over a few days or a few weeks, and it peaks out here and then retraces a little bit. And so in this peak, you've got a higher high. It's higher than this particular one. So this peak is higher than this. So this is the higher high. And then the price retraces back down to this area and then maybe boosts back up. And in this area, you've got a higher low. So this low is higher than this previous low. And then you rise back up here. So right in this section, if we have, this could be over the span of a couple hours, it could be a span of a couple of days or a couple months, we have a bullish trend. We are trending up. We're making higher highs, higher lows, higher highs, higher lows. So this is a bullish structure. And then what we have here, when we make another higher low here and we come back up, and let's pretend here we peak at this particular level. So right here, you're no longer making a higher high, you're making a lower high. This high is lower than this one. We have our first lower high. And as we retrace back, this area here now, this low is actually lower than our previous one. So we're not making higher lows anymore. We're making a lower low. This low is lower than this one. And suddenly our trend could be changing. And then we have a lower high here. So this high is lower than this one. And down here, we have a lower low. This low is lower than this one, and so on. A lower high, a lower low, and a lower high. So that's now we are in a downtrend. And again, this will depend on what time scale you are looking at this price movement. So that is the broad sort of basic outline of higher highs and higher lows. That's sort of what market structure is all about. Now, within that market structure, we have the breaks of structure that we talked about. We've got a break of structure to the upside, and we have breaks of structures to the downside. So when price here breaks through and it becomes higher than this higher high, we have a break of structure to the upside. So the trend, the green light is up and we're continuously going up. And right here again, when this area of the price breaks this peak here, we've got a break of structure to the upside as well. Green light is on that the trend is moving up. And then here is where we have a break of structure to the downside. So we have broken this lower low and we're continuously going down. We've broken this lower low and we are going down. So that is called break of structure. Here we're seeing that we have a continuation to the downtrend and a continuation to the downtrend here. Now, the other aspect here is what's called a change of character. So there's an area on a chart where the price is going to either fall or rise, and it's going to change the character of the trend. So here we've got higher low, higher high, higher low, higher high, higher low. We are in an uptrend. But here we've got our first lower high. So we are not continuing this uptrend right now. So that could be, okay, something to be cautious about. And then when we cross down here, when price crosses this higher low, that is an indication that the trend is potentially changing. We've got a change of character when we break this higher low down to the downside. And then generally when the price comes back up, it's going to retest this area. And what happens is now this becomes resistance and we start going lower and what was support here and rising up becomes a resistance zone and we start going down. And there we have, our change of character. The trend is no longer bullish, up and to the right, higher highs, higher lows. We have an indication now that we're making lower highs, lower lows, lower highs, lower lows. So that could be a warning sign in a chart that the trend could be changing. So those are the basics of higher highs, higher lows, break of structures, and change of characters to a chart. Now, what is important to consider that I mentioned earlier is that you want to take the time frame of the market structure and align it with your strategy. So while the market structure can appear clear on a single time frame, it's critical to understand that the different time frames can tell different stories. So for instance, a monthly chart might show a bullish trend with higher highs and higher lows, indicating a strong uptrend. However, when you zoom out into a weekly or daily chart, you may notice periods of consolidation or even temporary bearish moves. And we're going to look at a specific chart that's going to show you this. So these shorter term fluctuations don't negate the overall bullish structure, but they're simply part of the natural ebb and flow of the market. So this is where, again, multiple time frame analysis becomes essential for traders depending on what strategy you are using. So if your strategy relies on quick entries, you're doing day trading, quick entries and exits, the daily or hourly or even lower time frame charts might be your focus, but you'll still sort of want to check the higher time frames, perhaps a weekly or a monthly, just to ensure that you're trading in a direction of the dominant trend. Or your strategy might call for you to understand the trend of that particular security, or maybe not. But on the flip side, if you're a long-term investor, the monthly chart might be your guide to making decisions, and the lower time frames maybe will fine-tune your entry points or not, or you can just ignore some of that noise as well. So a real-world example that I thought we would just look at is just the chart of the stock coin, the Coinbase chart. So we've got some images here, and I'm just going to jump over to TradingView, which is easier, and we'll just look at this chart on TradingView. So this particular chart that we're looking at here is a monthly chart. So these candlesticks, they're all month. They represent 1 month. So it's a high time frame chart, and we can kind of see here that coin from the end of 2023, we are in a bullish uptrend. So we've got a high here on this particular month. We've got a higher low down here. Then we've got a higher high, higher low. Then we got a higher high, higher low, higher high, higher low, higher high. And, we're hoping that we can make it out of this month with a higher low here. So we don't want this monthly candlestick. We're recording this in April. We don't want it to close, basically below this particular wick. So we wouldn't want this candlestick to close below, the 146 range. And I don't think we will. So we're making another higher low here where we can potentially rise out of this. Now, if we were to jump to the weekly chart and kind of zoom out here, and we can see that although the monthly chart is showing us higher highs and higher lows, on a weekly basis, we've certainly got, some a lower high, lower low, lower high, a lower low there within this. And then if we jump down to a daily chart, then you can kind of see even more. These are just the monthly peaks here. And we can see within, even within this particular month, although we plan to make a higher low here from this particular one, we can see, we've got many higher highs and higher lows and lower highs throughout the months if you're looking at this chart on a daily basis. So if your strategy requires, taking action on a day-to-day basis, then the monthly chart might not be as effective and the structure might not be as effective for your strategy, as opposed to zooming in on a daily and seeing many more, lower highs and lower lows within, a weekly time frame or the daily chart. So it's important to just keep that in mind when you're looking at market structure. It can apply to not only high time frames, which can be important for your particular strategy, but it can also apply to the lower time frames. And again, your strategy will dictate what type of market structure is going to be more important for you to focus on. So for beginners, I think it's important to get a good grasp of the general market structure setup. And hopefully this video was enough to give you that information. Certainly there are other resources that you might want to go out and look at. But again, what we looked at here, just the focus on higher highs, higher lows, break of structure, change of characters. And then I would encourage you to just go and sign up with TradingView, get an account for free, and just kind of see if you can look at the differences on various stocks of the market structure on a monthly basis, looking at a weekly, a daily basis, and even lower time frame. So again, market structure, it's not a mystery. It is price showing you who's boss. Are the buyers in control or are the sellers in control on that particular time frame? So the breaker structure tells us that the trend is continuing on. And if you notice a change of character within the market structure, then we could have a reversal. And if you're looking at that on a monthly chart, that could be a little bit more of a concern as opposed to a change of character on a daily or a weekly type of chart. So again, hopefully you found this useful. Quick introduction to market structure. It's really important to understand this. And I think the more charts you look at, the more people you're watching who are analyzing charts, you're going to understand this better. It's going to click for you, and hopefully it's going to help you with your trading. So thanks you so much for listening to this and watching this video. And below you can find links to the 6-month blueprint if you're a beginner, or starting with TradingView if you haven't signed up already with that service. So thanks so much for watching, and we'll talk with you in the next video.